Your first idea, Stan, is Costco.
Yeah, so it's a name that I've talked about before in the top pick segments of previous shows. Costco's got 116 million members around the world at this point, $225 billion in expected revenues for 2022. So they continue to build that revenue over the years. The pandemic didn't really affect Costco, as you know, and they are the dominant name in the mass merchant space. They continue to have very, very strong loyalty. If you look at the US and Canada, the membership renewal rate is about 92%. So that's great loyalty that we're seeing from North America. They really have they're a clear leader in cost leverage, procurement strength, store efficiency, very clean and efficient stores. That's allowing for store traffic to remain very, very high. One thing that you want to know about Costco is that despite the size of their warehouses, they really concentrate their buying power on a relatively small number of items, about 14,000 units in store. Compare that to a Walmart superstore, 140,000 units. So they're really able to really squeeze prices down on those 4,000 units that are in store. Given the fact that rising fuel costs are happening and inflation is happening, I think that value proposition that Costco is able to offer is continuing to grow more and more attractive for its members. And as you know, the members are slightly higher income, so they're less affected by what's happening in terms of the inflationary environment. So I continue to like this name. It gives you some growth aspects and it's defensive as well.
Okay. Your next idea is an ETF. It's the iShares S&P TSX High Dividend Index, XEI.
So we've held this ETF for a number of years. It's really designed to replicate the TSX Equity Income Index. It basically provides very strong dividend income from high-quality established Canadian names, including Royal Bank, TD Bank, Bell Canada, or BCE, TransCanada, Enbridge. Those are 5 of the top 10 names in this ETF. You're getting a 4% dividend yield. Again, banks, pipelines, utilities, and telcos. It's down to about 12, 14, well, actually it's closer to 14% over the last 2 months. So I think this provides a pretty decent opportunity for those looking for yield, but also exposure to the capital appreciation potential of some of these names. And you're only paying about a 22 basis point expense ratio.
Okay. What was the expense ratio again, Stan?
22 basis points.
Okay, 1/5 or 1%. Finally, Shell would be one of your favorite ways to play energy.
Yeah, I think that, certainly there's a great opportunity given the fact the last few weeks we've seen energy prices come down significantly in the equity space. Shell is really one of the world's largest integrated oil and gas companies with, some of the most attractive assets, quite honestly, in the global energy sector. They've got the largest LNG, liquefied natural gas business, and the biggest chain of fuel stations around the world. They're in basically 70 countries, so they've got enormous reach as well. Last month, they reported their highest quarterly profit, $9.1 billion since 2008, and they announced plans to increase their dividend. I think that going forward, they can really meaningfully increase their dividend because they had actually brought down their dividend when COVID hit, and they never really brought it back up in terms of the payout ratio. So their dividend payout ratio is only about 20%. Whereas other companies, they kind of kept, like Exxon and so forth, they kept their dividends at the same level. So I think that Shell could come back and increase their dividends. They're also conducting an $8.5 billion share buyback program this year, which is also, as you know, shareholder friendly. Given the fact that they're the main LNG player in the world, they're going to benefit from the rise in global gas demand and what we think is stronger prices going forward over the next decade. And you're looking at about 15% free cash flow from Shell, which is at the upper end of some of the majors out there. You're getting about a 4% dividend from Shell, and it's only trading at 5.3 times or 5 times projected earnings going forward. So we do like this space. I think Shell provides a bit of value among some of these big integrated oil names.
Have you a favorite name among the Canadian energy players, Stan?
We own Suncor and Canadian Natural Resources. I would say those are 2 that I really like in that space, and we continue to buy into those particular names in Canada.
Oh, okay.